Well, many issues have been certainly identified in our last flash presentation and also in our conversation with Mr. Branson. The Libra project, of course, spurred considerable attention and some controversy from regulators thinking about how they could lift their regulatory game and start innovating themselves. And ever since the announcement, central banks have increasingly espoused an interest in promoting or exploring their own central bank projects. And today, central bank digital currencies, or CBDCs, are perhaps the hottest issue in international markets and international monetary relations. And so I am absolutely delighted on this leaders panel to have some of the people really at the forefront of that conversation around the world. Most of you probably know everyone on the screen right now. I'll just quickly identify them. Benoît Cœuré, who is the head of the BIS Innovation Hub. We have Jon Cunliffe, the Deputy Governor of the Bank of England. Cecilia Skingsley, the first Deputy Governor of the Riksbank. And Chris Giancarlo, the co-founder of the Digital Dollar Foundation and former chairman of the CFTC. Thank you, all of you, for joining us. And to really talk through, again, these issues that are on the front lines of papers around the world. Benoît, I guess I'll start with you. How do you view the current global state of play as to CBDC development? You are really at the intersection of conversations around the world from your perch at the Bank for International Settlements. How far along are we when it comes to reaching this panacea of the global CBDC?
So, good morning from Basel, and thank you, Chris, for having us here. The Fintech Week is a really fantastic conference, so congratulations for putting it together. Well, I guess it's fair to say that CBDC is not in a way not a new issue. I mean, if you want to take a lot of steps back, it's only another step in the central bank technological journey, which has led us from papyrus to paper, and then from paper to plastic, etc. And central banks have been embracing innovation from the start, and it's only a new step they're taking. And it's also fair to say that some central banks have blazed the trail, and that was mentioned in the presentation a few minutes ago. And certainly the Riksbank is part of them, and People's Bank of China also is part of them. And they've been in many ways leading the way. And what we're seeing today is still a turning point, I would say, in terms of central banks' approaches to CBDC. And I would really describe 2020 as the moment where central banks have moved from research to action. There has been a lot of academic research on CBDC, a lot of conceptual discussion, and now it's time to move to experiments and building proofs of concepts and testing the building blocks of CBDC. The next step would be to decide on a CBDC. Which in many ways has to be a political decision for each and every central bank to take after consultation, after consulting the public, after consulting parliaments, governments, etc. But we are at exactly at the step before that, which is going into the real life and testing the different building blocks. At the BIS we ran a survey earlier this year, and we found that. Out of all central banks in the world, 80% were studying CBDC, 80%, which is up from last year. 40% are running proofs of concepts or prototypes, and 10% are doing pilot experiments, just like the PBOC is currently doing in Shenzhen. So it tells you a lot that we are really moving now to action. And maybe one last point worth noticing is that there is a lot of willingness to do it together. That is, there won't be one single CBDC. All CBDCs will be different because financial structures are different, preferences towards cash are different, central bank mandates are different. but there is a lot of willingness and an appetite to at least to investigate together and to identify which kind of requirements or common features and common principles are good for the system, as a system, for the international monetary system to work smoothly. And that's really the essence of the report, which was published a couple of weeks ago by 7 central banks at the BIS. It's about laying the foundations and making sure that whatever we do will not add to fragmentation in the system.
Well, Governor Skingsley, you were just referenced and a lot of the work you were doing. What are you seeing in terms of the development of designing proofs of concept? And more specifically, what does that process look like from the inside? And what are you seeing as some of the primary barriers, both from an administrative standpoint, but also from a technical standpoint?
Well, thank you, and good morning to you all from Stockholm. So, yeah, we started launching this research project about 4 years ago. I gave a speech about it. And back then, there weren't many of us interested in this issue. And our starting point was the rapid dissension of usage of cash in the Swedish society. So we thought it was prudent from the central bank to bring up a discussion with ourselves, but also with the central banking community and society as a whole. How do we actually want these things to be organized? And money is not only about technology, it's also about policy, and it's about legislation. So it's a very intricate subject, and it really sort of strikes to the core of what a state is really about and what it offers to its citizens. And as technology now flips and people adapt to new changes, we on the public side has to come along in this development and offer, as Benoît pointed out, continue our historic role and continue to offer our services in a way that is adapted to what people are using in terms of technology in our time in history. So you said ask barriers. I would have to say that I don't see technological barriers in this area, but I do see technological challenges. And the challenge is not so much technology in itself, but it's more about we have to choose what sort of policy objectives do we want to focus on? What is the problem we want to solve? And depending on what that is and the purposes we want to serve, then you choose the technology after that. And the proof of concept we are working with is not mainly a technology issue we're talking about. It's more about the features and the services that we want this e-krona to have. And you can make many different choices here and choose many different models. And that's what we're doing at the moment.
And just so that I understand there, when those technology choices come along, it's usually through is it usually through some kind of technology provider or questions as to what you want to build out in-house?
So the way we have designed the pilot project currently is that we are doing this in cooperation with the company Accenture. And because we think we'd be able to kind of jump a couple of steps forward if we get some of this knowledge from the outside rather than from the inside. But there are a number of things that you can only knowledges that you can only keep within the central bank. If you think about 300 years ago when paper technology created basically notes, you had to be very quiet about the specific features in order to make them safe. And it's a similar way things develop now, that you can use sort of external or outside competence, but some things you have to keep to yourself. And I think one of the intricate issues in this is what sort of model you want to have, because different models can serve different needs. So if we want, for example, a CBDC that strengthens innovation and competition in the private sector, we should probably go for a more decentralized model. But we, on the other hand, wants to focus the CBDC more on serving resilience, that like it works more like a backstop when all other system fails. A central bank digital currency should still be standing. Then you have to go for a more centralized model where the dependence on private intermediaries are less of a circumstance. So there are many interesting choices to handle going forward.
That's really interesting, Mr. Cunliffe. I mean, do you see sort of when you look at the basic models and design choices, is that more or less the kind of, for lack of a better word, risk-reward trade-off that you're looking at, sort of the innovation versus resilience, and then tying that to the degree of centralization, or is there another perspective that you're taking when you're looking at a potential CBDC, and what are the kinds of models that are interesting you?
Well, first, I just emphasize the point that Cecilia made. It's important to look at this from what problem you're trying to solve and what problems you're trying to avoid. I think for us, we put out the Bank of England put out a consultation document in February. The problem we're trying to solve is the fact that physical cash is no longer convenient. It's becoming increasingly inconvenient for people to use in their everyday lives, and the COVID crisis has accelerated that. And on the other hand, it's becoming increasingly less acceptable to merchants for some of the same reasons, even merchants that are able to take physical cash. And if that's the problem you're trying to solve, then I think that leads you to a general purpose retail CBDC. It also leads you to decisions like, do you want a model that interacts freely with other forms of money? We have a number of different forms of money that operate in our economies at the moment. That's one of the ways you get competition. It's one of the ways you get innovation. So if you want a general purpose CBDC that operates alongside other forms of money and that encourages competition and innovation, it leads you down the route of a central bank providing infrastructure, but on the other hand, allowing the private sector to use that infrastructure to innovate and ensuring that all of the private sector operate on the same basis. In our consultation document, we put out a particular model. We did that not because we've chosen a particular model. Indeed, we haven't made a decision yet whether we want to implement a CBDC. And as has been said, that's not just a choice for technocrats. That's a choice for society and for the political side as well. But we put out a model because we thought this can appear a theoretical subject to people, or blue sky thinking. And when you put something out there, then you get a much stronger response when people look at it and can see what it could do. And I think very important for us in that model was the concept of ensuring interoperability, innovation, competition, but on the other hand, also ensuring that people did continue to have access to basically state money in the form of a central bank currency. You then face a number of trade-offs. I mean, people watching, if they haven't already read it, there's an interesting report from a group of 7 central banks and the Bank for International Settlements that we put out last week. Benoît, Cecilia, and I were some of those involved in it, which then set out some of the trade-offs that you face when you try and deliver the objectives that you have. There's the trade-off between usability and convenience and security. There's the trade-off between privacy and law enforcement. There are a number of trade-offs, and then you have to make those choices in the technology. But the key thing is, before one dives into, do you want a ledger or do you want a token? And I think, Chris, you're putting forward a digitalized dollar that's a token. Our consultation document had a ledger-based system. But before you dive into all of that, the key point is to establish what are you actually trying to achieve, and crucially, what are you actually trying to avoid as well in terms of the risks.
What I've been struck by thus far is that the origins for many of the conversations, certainly on the other side of the pond, are driven by this question about cash and the disappearance of cash. But Chris Giancarlo, you and I speak very often and very frequently about these things, and you're certainly the leading voice really about many of the issues of a digital dollar, or the prospects thereof in the United States. how do you see the drivers of that conversation here in terms of how they compare elsewhere, from the work that you're doing over at the Digital Dollar Foundation and elsewhere? And how does that inform what you consider to be some of the models and choices facing folks a little bit in my neck of the woods here in Washington?
Thanks, Chris. And it's great to be with Benoît and with Jon and Cecilia. We follow their work very, very closely, and the thoughtfulness they bring from it and the global perspective they bring is very important. As we at the Digital Dollar Foundation and our partnership with Accenture and the Digital Dollar Project think about what a future CBDC might mean for the United States dollar. And our focus is relatively narrow in that regard because we are focused on the dollar and its role. And as we think about that, in our white paper, we put forward what we call our champion model, which has a number of elements, as Jon noted, is token-based, not accounts-based. It's distributed through the existing two-tiered banking system. And at heart, we believe that its form should follow function. And just as Jon and Cecilia said, you have to ask yourself, what do you want to achieve? And then I think a lot of the functionality and the design choices come from that. And there are many design choices. There's no perfect one. Everyone has a balancing aspect. But at heart, when we stopped and spent time thinking about the dollar, we really came down to a set of values that we think are embedded in the dollar in its current role as a global reserve currency. And we think making sure those values are embedded in a digital form of the dollar, a digital dollar, a US CBDC is critically important. So what are those values that we seek to enhance and preserve and improve for a generation to come? Well, we think about things like proper balance of privacy against law enforcement needs of the state. We think about the rule of law. We think about free enterprise and free capital markets freed of state interference. And we think about the attributes that we believe are embedded in the dollar that have made it the premier world reserve currency. And as it's different states, both democracies and non-democracies, start rolling out elements of digital currency, we think other values may be embedded in them. State surveillance, as was noted in an earlier video, or interference in markets. And so we think ultimately when you design a central bank digital currency, making sure you embed in it functionally the values that a society holds dear are critically important. And so as we've been spending a lot of time thinking about this, we think ultimately we come down to it's about value choices. And as we look at each little design element, how do those value choices play out in those design elements are something we spend a lot of time thinking about.
One of the most interesting things, Benoît, when you think about the history of the BIS, it's something that I tell my own students when I teach them, is just how much that institution has adapted over time and evolved with the very concept of money. From gold to fiat currencies. I mean, the Basel or the Bank for International Settlements has evolved along with the monetary system, and as its own sort of prominence in international monetary relations has risen, it's had to navigate the fact that countries actually do have different values. And they do have different kinds of priorities, and they lie on different sort of points in economic development and the like. And here, when I'm listening to Chris Giancarlo speak and Cecilia, you're hearing about values and priorities, and thinking to yourself, well, what is the problem you're trying to solve? And when you're asking yourself about problems, what's your perspective about what a problem is? So you can ultimately certainly foresee a world of different kinds of CBDCs, in part reflecting different kinds of national values. And here the BIS is going to sit at the middle of it all, trying to think about questions that you're grappling with of interoperability and how exactly would a world of multiple CBDCs sort of operate from both the standpoints of financial stability and from a monetary perspective. I mean, how do you go about thinking about interoperability, even where you may not know the very specifics as to the designs of any sort of CBDC that may be in the making?
So it's clearly not an easy question you're asking, but let me first say that I fully concur with Chris and with you when you say that that CBDC will be a matter of national preferences. It will be a matter of national taste, and there will be different CBDCs, and that's because it's fundamentally a sovereign decision. Which is also why some of the concerns we can hear about the international spillovers of CBDC are, in my view, a little bit overblown, because CBDC projects are primarily for domestic purpose. Parliaments are not very excited by international matters usually. They really focused on what is good for their citizens, and rightly so. So these are fundamentally domestic projects. And so you might ask, why is the BIS role there? And if CBDC is a matter of national taste, why should central banks work together, right? Well, first, they can pool resources, and that can save a lot of time. And that's a little bit what we've started to do in this report, which we've been mentioning, trying to work together to advance faster. And that's exactly what the BIS Innovation Hub is meant to do. Pooling resources, to have joint experiments, so that you don't have to duplicate resources, and you can move faster. And second, there are issues related to the way the system works as a system. And I think we all agree that the well-functioning international monetary system and international financial system is key for global prosperity. It's key for growth, and that's where interoperability kicks in. Now, interoperability is a little bit of a catch-all word. I mean, it can mean different things. It could mean that CBDC platforms in different countries are connected. It could mean that CBDC platforms are built on common standards, so that private operators, private players can access them. And that's very important, because as Cecilia rightly said, we need private players, we need payment service providers to be active using CBDC and connecting different places nationally and internationally. And that could also mean that end users could use multiple CBDCs in the same wallet, for instance. So these are different meanings for the same word, which is interoperability, and there are different technical answers. And that can also mean that countries' jurisdictions will be connected through their traditional payment system, RTGS systems. And if you have a good way to connect different RTGS systems in different places, and then CBDC is settled in the RTGS system, that's also a nice way to interconnect CBDCs. So you see there are different ways to do it, and that's why the discussion on CBDC is very, very closely linked to the broader discussion on cross-border payments, which Jon is leading for the G20 under the G20 action plan. It's one part of this broader discussion on cross-border payments.
Yeah, just that in and of itself, you know, from being in the United States, where we have sort of parallel conversations going on in terms of our RTGS systems, not to mention sort of larger conversations on a CBDC, it makes that kind of balancing act really interesting. And I think we may return to that shortly. But you know, when you talk about interoperability, Cecilia, and you think about, well, let's talk about a more ambitious form of interoperability. You may, I'm sure, be familiar with some of the concerns people have about CBDCs, particularly from countries that have very large GDPs on a global basis, and the relationship of a CBDC vis-a-vis other kinds of countries, particularly about the transmission of monetary policy internationally. And then there are some real concerns that CBDCs could create not only monetary problems, but also sort of either political or financial ones, to the extent to which money creation is effectively shifted entirely to central banks from the commercial banks. Is this something that's kind of come across your radar? Do you think that these concerns are overblown? And from a policy standpoint, how do you go about kicking the tires, if that's the right metaphor, of a CBDC project to help diminish both the risks that are perceived and the concerns?
Well, there were a number of questions in that question, but let me start with the saying yes. We have all these questions. I've spent several rounds around the globe before the pandemic hit us all, discussing this issue. So I'm familiar with them, and they're all very good questions. And if I start with the national arena, and this idea of a CBDC sort of taking over everything and would harm the banking system. Well, first of all, we have to remember history here, that central bank money in the form of cash and commercial bank money in the form of accounts have been working side by side for the best part of 150 years. So this is not a new thing. This is just technology changing, and we have to make decisions on how to adopt to that technology change. And over time, deposit money has become more and more available as making payments. And one of the ideas from the report that Benoît and Jon chaired that we talked about, and it was launched just recently, is the sort of the do no harm principle, that we need to meet our historical role, making payments safe and efficient, but also meet our other objectives, which is financial stability and monetary stability. That's why we are conducting monetary policy. Now, as technology changes and the sort of the national borders here becomes a bit more blurry in this area, I think it's important to remember that, first of all, money is a competitive industry. If you look at history, it's really something attractive to have the rights to issue money. It's like an endless loan where you pay no interest. So of course it's attractive, and that's why governments sort of traditionally regulated it. On the other hand, the payments, but you can't. Sometimes when people talk about CBDC, they only talk about CBDC, but you can't really talk about it without talking about the whole system. And money and making payments are, they're very intricate. And the payment system is, you might think it is also competitive, but if you think about it, it's actually not a very competitive market at all. It has strong network effects. So just for instance, most people doesn't carry around one card for each shop they go in. They use one or two, and that's why we have MasterCard and Visa and the likes that are global players. So when you think about CBDC, and you get the question, I get the question, what is the purpose? You can try flipping the question and say instead, what is the situation that we don't like and the CBDC could help us to avoid? Well, it would help us, depending on design again, it could help us to avoid a number of unpleasant situations. And one is that small countries, such as my own, sort of lose control over what I would like to call the monetary sovereignty of a country, meaning that if other countries are making more efficient, more up to sort of leveled up the game with and take over, you can get something which has been called a digital dollarization of countries, which a number of countries wouldn't like to have. And that brings me into my last comment about this, which is, how do you design the system on a global scale? And that's hard, and I think some countries, and it doesn't necessarily have to be advanced economies. I find it much more plausible that there will be smaller countries which really have financial inclusion problems, that they will start this, because they don't really stand to lose as much as big advanced economies if things goes and you have to adjust the system a little bit on the way. And then other countries will learn from that and pick up, and there will be national deviations, but along the line we will sort of put the systems together, and more countries will probably latch onto it. And I think in about sort of 50, 100 years from now, people will go back to debates like this and said they were really worried about a number of things. They were worried about the wrong things, but I think I'm optimistic that we will get there in the end.
So there's a very famous clip in the United States when Bill Gates was first trying to describe the internet to a very famous comedian, David Letterman. So I guess you're sort of saying we'll have this, maybe they'll be looking at this clip and saying, wow, there are many people very concerned about CBDCs. Well, Jon, I mean, do you have, or do you share that kind of optimism, particularly, when you look at the transmission of monetary policy and the relationship to sort of how the introduction of a CBDC could impact lending with domestic banks. I've heard certainly from many financial institutions and many banks who, where people have expressed some concern that it can not only impact their business, but really sort of shift lending and the money creation role out of the commercial banks and sort of move the balance of power to central banks. Is this something that you've thought about as a realistic concern, or is it just sort of an overhyped concern? And especially when you think back and you get back to your original sort of driver, which is the disappearance of cash, right? So if you start to see a disappearance of cash and you see the introduction of a CBDC, and depending on the design features of that CBDC, if you see more of the sort of literally financial power migrating to the central bank, is this a kind of a disaster scenario, or is this something that warrants considerable thought?
So I think I'd say it's a real issue, but you shouldn't blow it out of proportion. I mean, what we've been talking about, as you say, is a retail payments-based CBDC, not a CBDC for monetary policy purposes, and also a CBDC that would exist with other forms of money, commercial money, maybe private sector digital money, properly regulated. And I know you had a discussion earlier on about stablecoin. The key thing is we don't know the behavioral response of people to a central bank retail currency, digital currency. We don't know whether they'll want to keep all of the money they currently keep in commercial bank deposits for transactional purposes in it, or whether they'll want to keep some in it and maintain their normal retail accounts. It's possible that you might need features within a CBDC, going back to that foundational principle of the report. A number of people have mentioned do no harm, and do no harm to monetary stability and financial stability. It might be that you would need some features to ensure that it wouldn't destabilize or cause problems for the monetary policy transmission mechanism. But at the moment, I think I don't see that as necessarily the main danger, or potentially a likely danger. And on this question of financial stability, a number of people have alluded to the problem you might have with bank runs. People could run very quickly to a digital central bank currency, or even just the disintermediation of the banking system more generally. Again, I think we live with those issues now. I mean, we live with those issues in terms of physical cash. We have mechanisms to prevent bank runs and to deal with them when they occur. It may be that a CBDC, will need some additional features to deal with that, and that might mean restrictions. But actually, in the UK, certainly, if you walk into your bank with a huge amount of cash and want to deposit it, you might find there are some restrictions. And if you want to make a very large payment, even as a central banker, you get asked some fairly probing questions. So we live with restrictions and some would say controls on the way we use money now. I don't think it's impossible to design a CBDC that wouldn't be able to deal with that. And I think that just say that the issue is, again, to start with what you want to achieve and then see how you deliver the do no harm, rather than start with the things it might do. And it may be we have to start small, and as we learn about the behavioral response of people to having this asset, to go further. If I can make just one last point, talked about the balance of power between central banks and commercial banks, which obviously we're all fascinated by. But it's not that long ago, and actually I could even remember it, when if I wanted to use a credit card, somebody rolled a roller over a piece of paper with 4 sheets of carbon to do that. And I couldn't use a credit card to buy my coffee. And sometimes I couldn't use a check below £30, which was a much higher value in those days than it is today. The balance of power, if you like, what we see now in the use of commercial backed money in everyday life is just a huge shift that's occurred over the last 25 years. And these things move backwards and forwards. There is no, the book of Genesis didn't have within it a division between central banks and commercial banks. It evolves with technology and it will continue to evolve. We have to ensure it evolves in a way that meets our public policy objectives.
Well, I can say that you have now thoroughly done something that I had not anticipated, which was introducing theology into the central bank digital currency debate. Chris, I think that Giancarlo, I think that one of the interesting conversations here, I mean, the United States, the way in which we sort of oversee our financial system, our monetary system is quite interesting because we have obviously the Fed board, and then we have the regional banks. And then even added to that, we have a very active and a very large sort of banking system. Even as chairman of the CFTC, you had talked a good deal about what an ideal sort of interaction would be in order to tackle some of the design questions, even once the government sort of creates or articulates what kind of values it would have. We were talking to Mark Branson, who had laid out sort of how he thinks about that kind of coordination between, in the case of the Libra Association, but also other cryptocurrency founders and technologists, sort of the ideal relationship between the state and different sort of cryptocurrency actors. When it comes to the CBDC question, how do you see that playing out in an American context in a more fragmented monetary system?
We talked about values, and Jon actually talked about the book Genesis, and that comes back to what I began the conversation with, and that is that, how does society enshrine its social values into its money? And in fact, another conversation I had with Jon not too long ago, he said to me, it seems like every several generations, society asks the same question again: what is money? And I think we're at one of those points in time because of this new technological revolution in terms of the internet of value and the digitization of things of value, that we're once again asking the question, what is money? And it's not just central banks that are asking the question. Society at large is asking the question. In fact, we can think back 10 years, it was really Bitcoin that really started us down this road. And then it was other things like the pandemic, like China, and like Libra coin that have gotten all of us. And so I think there's a broad conversation going on right now that's not confined to the official sector. I think it's very much an official sector, public sector conversation. And so one of the things we're trying to do in the States at the Digital Dollar Project is bring together the conversations that are taking place in the official sector and the work that's being done in the private sector so they can benefit from each other. And in fact, that approach is consistent with the American tradition of the way we explored the lunar surface. It's consistent with the way the internet was developed with the DoD and DERPA, but also with the private sector actively involved in the development of the internet. And I think that as the United States goes forward in looking at a central bank digital currency, it's going to engage more directly with the private sector. And we at the Digital Dollar Project just last week put forward our proposals for a series of pilot programs that we think can explore both the retail use of this, but also wholesale use of this in different use cases. And I commend your viewers to take a look at that. It's on our website, digitaldollarproject.org. And we ourselves at the Digital Dollar Project in the next few weeks will be announcing a project that we're going to work on to start experimentation in this area. And we've been engaged with the official sector throughout, with the Federal Reserve Bank and with Treasury and other government agencies, because we want to really see this very rich communication between the private sector and the public sector. And I'll just end on this note. You know, I mentioned that's a US tradition, but if you look around the world, that's what's happening in most of the other projects as well. Certainly China is engaged very much with its commercial actors in the development of their DEP. And I think that that's very much the way that this will continue to develop in the United States.
Yeah, you know, we only have a couple of minutes, but Chris brought up the big issue out there with China and particularly with their involvement with their CBDC project. You know, very, very briefly, I would like to get each of your sort of your opinions about whether or not, number one, how do you view this project in terms of how advanced it seems, and then what do you think it's doing to the conversation on CBDCs domestically for other countries that are looking about their own values and also thinking through what kind of money and monetary system they would like to have? We'll go in reverse order this time. Since you brought it up, Chris Giancarlo, we'll start with you.
Well, you know, I actually think that if you categorize, as you often see in the press, the development of CBDC as a race, then they'll often talk about China's advanced start, and obviously Sweden as well, but they define it in terms of who goes first. I actually think that's the wrong way to look at this. I don't think if there's a winner, I don't think the winner is necessarily who's first and the loser is necessarily who's last. What matters is which central bank successfully incorporates its societal values in a successful development of CBDC. So it's not a question of going first, not a question of going last, but it's a question of success in making sure that a CBDC has those values associated with it. And that's our focus in the US. Now, on the other hand, one can't be too late to the game here. And that's why we very much advocate that, at least in the US context, that the United States really get in the game and get active in the game in a way that it is increasingly, but perhaps it wasn't as much 6 months ago. So we're very pleased to see the United States accelerate its work in this because of interoperability. The last thing the world needs is for the United States to not be engaged and then wake up 3 years from now and suddenly say, oh, we are going to engage. And oh, by the way, we want to go in a different technological direction. We're going to not be concerned with some of the interoperability aspects. So the United States needs to be engaged now. But ultimately, it's about incorporating those values into a successful deployment of CBDC.
Cecilia, China, 30 seconds.
I think it's just a very excellent example of how a digitalized economy makes us all have to ask how we serve societal needs in the best possible way. This is digitalization that changes people's behaviors, changing the landscape of the monetary system. China seems to be on the forefront. We also have to do our homework in terms of cash disappearing rapidly. And we're just going to have to carry on. And it's going to have to be quite a rebuilding of the infrastructure and a little bit of a change between public influence and private sector influence before we get it where we want it to be.
Jon?
Yeah, so first of all, I agree entirely with Chris that the wrong way to look at this is to feel this is some form of race. And the Chinese actually were the first, I think, with paper money. So maybe they'll be the first with a digital currency. The key is whether you can meet your societal needs and your economic needs and find a way to reflect that. And I think given the way the world is, and national jurisdictions operate, this will be first and foremost a set of domestic issues. Where we have a real opportunity, though, is unlike other periods of change in money and development of national infrastructure for payments, we actually have the opportunity now to ensure that we don't build in unintended barriers to interoperability in all the forms that Benoît discussed. And where we choose to limit interoperability, that's an actual choice we make, rather than as what's happened in the past. Our systems have evolved, and it's just been very difficult to achieve some of the gains we could get through managed and responsible interoperability. So I really think we have an opportunity, but you start from how do you deal with the needs in your own society and your own economy, while trying to be aware of what you do to make sure you retain the optionality on interoperability.
Well, our time is up, but I'll let Benoît have the very last word.
Well, I would also agree that it's not a matter of competition with China. So if you have a hammer, everything looks like a nail. So if you want to pick a fight with China, you can pick a fight on CBDC, but it's not about CBDC. It's something different. And when we discuss international cooperation over CBDC at the BIS in Basel, PBOC is very much part of it. And we have a very good and intense discussions and relations with CBDC. And when you look at the DCEP project in China, it's primarily a domestic project. It's not a geopolitical project. And the way I would say it is that they have these big tech players, which are becoming fintech players or big tech in finance, with huge networks, and they want to be on top of it. The authorities want to remain on top of it, and authorities want to be sure that digital currency, whichever way it is being done, serves public objectives in China. And that is the same conversation everywhere. The objectives might be different, obviously, but the kind of conversation will be the same everywhere. And so there are lots of lessons to learn from their experience.
Well, thank you so very, very much. I mean, that topic in and of itself, I know is a big one when against the backdrop of the internationalization of the yuan and the like, but thank you so very much. This kind of conversation is vital. It's necessary, and just having you here for our audience is what DC FinTech Week is about, and I appreciate all of your time to come. You have been wonderful, both on camera and off with me, and I just wanted to thank you again for making the time. And I guess we will now be switching to our next panel. But before we do, we're about to make this jump now from CBDCs to non-governmental currencies and what they mean for the market. But before we do, I want to introduce our poll for the day. So shout out to Chainalysis for the support. The question is, for the audience, what, if anything, is stopping you from investing in cryptocurrency? Not CBDC, in cryptocurrency. And you can go to slido.com to input your opinion with the code DC FinTech. And we will, again, DC FINTECH, and we'll provide the results for those who do. And with this audience, I'm pretty sure there will be more than a little curiosity.